well. We have a local group here and people on the webinar currently. So currently we're seeing so we'll see who's good at doing this kind of stuff. That kind of thing, how do you know notes? For those that are experienced, this should be easier. Those are not, jump on in. As we wait for more people to join in here. If you haven't seen this quiz before, it's Dave Van Horn's quiz and how well do you know notes? And so you feel free to take this. I will post this in the actual comment section. So feel free to take this and enjoy it. Thanks, Tim. Tim's stating that he believes it's borrower and property. I'm going to put this quiz in the chat. Anyone else want to answer in the chat, feel free to do it. Here's the quiz as well. Next question. True or false, a second junior lien holder may foreclose on a property in the event a borrower defaults on the loan. So, true. Well, I'm going to share this link again with everyone else so we don't get over in crazy on stuff like that. But this is 10 questions on how do you know a no. So, everyone that is on the webinar, I do want to just do some quick, brief housekeeping. As everyone knows, pretty much we have an East Coast Just Note Facebook group that we use, that we comment questions, post on that. We also have a Facebook note list that we use to indicate where people are living. We use this for due diligence. Find where, if a property is nearby, we can reach out to someone local to the property, ask questions. It's awesome. And find someone local to you. Next, of course, my Facebook business website. And then we have an event page, what happened today. For local people, of course, we have a default mortgage meetup here in local New Jersey. I do want to wish everyone, hopefully everyone in Florida and Texas is safe and sound, their family's doing well. And everything okay. So we do run this meetup monthly. We do a webinar / live event. So people that are local can get introductions and network with other people. We also do this via webinar. We use Zoom and we bring on special guests monthly. You can check out our previous in our YouTube YouTube page for our business. With that said, I'm going to turn this back, introduce Mr. Chaz Guinn from Granite Strategic Investments. Sorry, Chaz. Old names don't die fast. So we want to bring this up, and we're going to introduce you. Chaz, can you do me a favor? And I've known you for almost a little over 6 years now. It's crazy to think that way. And who are you? You know, who is Granite? Who are these famous people that we enjoy talking to on a regular basis?
No, well, thank you for having me on, Dave. Yeah, believe it or not, man, 6 years already, right? Like I mentioned, Granite Strategic Investments, we're based out of California. So hello to everyone on the East Coast. I know it's getting late in dinner time for you there. It's about 4 o'clock for us here. But Granite Strategic Investments, guys, we've been around for 7 years. We have bought and sold roughly about 7,000 single-family residences directly from major banks or the GSEs. So what we've done is we've been able to kind of build a bridge between Wall Street and everybody that's in this room as a Main Street investor. It's very tough for you guys getting into this note space to go direct to a Wells Fargo or a Chase to purchase a note or two, especially on a one-off level. They're typically going to want you to spend typically 25 million to 30 million or more. And how many of us are out there having that in our checking account, right? So we've built that bridge that allows you guys to get into the space and look at individual loans to then kind of get your feet wet per se. What we do differently than any other seller that you'll come across in the country is we want you guys as a buyer to see everything that we see when we buy the loan so that we can ensure your success once you have the loan post-close. So what all that really means is that a lot of sellers do not share with you their internal valuation for the property or what potential may be on title or how delinquent the taxes are. They want you guys to go out there and verify all of this information. So for us, we don't believe in that mantra, because what we see in this business, because this business is a less brick and mortar than your traditional real estate play is, where you can drive a house, go into the property, see everything, look and feel and touch it. We are buying mortgages, which is more or less the paper that's secured to the real estate. So for us, there's times when in this paper-driven world, there's things they just don't want you truly to see. We want you guys to see everything we see. We order updated market valuations. We order updated title, taxes, credit and collateral information, and we share this information to you for free. We usually spend around $350, $400 per file or due diligence that we're giving to you guys for free. Now, what we understand is before we've done a deal together, we always are going to tell you trust but verify the information. And what we're hoping for is, because the information is so fresh and new, once you go out there to verify my valuations and you see that Granite says that the property is worth $125,000. When I go look at the property, I think the property is worth $120,000. So give or take, Granite's kind of within the same ballpark. So with that said, hopefully as we get going further and further, as we get to know each other better, you start to kind of believe in the due diligence information that's been given to you and kind of can save you on deal costs as you begin to ramp up your business. So Dave, I'll turn it back over to you. But guys, in a nutshell, more or less, that's Granite. We built a bridge between Wall Street and Main Street that allows you guys to get into this note space and buy bank direct loans.
Great. I appreciate it, man. So we wanted to get into, why I brought you on. You've named a lot of stuff already that I feel is tremendously welcoming in a space that's sometimes hard to get into. With that said, I think that people have a hard time trusting people in real estate in general. However, we quickly get involved with someone that can show us inventory that we can trust, not only because of who you are, but also what you offer to us. Okay. Your honesty, your trustworthy is something that's been around for a long time. You wouldn't stick around as long if it wasn't. What we do have issue with, though, is sometimes bringing in new inventory, finding new inventory monthly, and the stressors of learning the space from more of just the legal end of it, but actual how to do the business. And I did want to bring you on to touch on the stressors that we all have. And what I've been told by yourself is that you're bringing out some new education that will help us along with that. Because I find that a lot of times we have simple education out there, maybe education of, find some deals, JV partner, and get into a deal and find out what happens afterwards. Or making bids that are not appropriate and not be able to fund them, then get blacklisted by the seller. But along with that, you now ruin your opportunity with a funding partner that you may be able to do a future deal with. So, Chaz, can you share some of this new education that you guys at Granite are bringing out to not only the beginner investor, but sometimes some of the advanced investors that are around? Hold on, Chaz. Give me 1 second. Got muted for some reason. Give me 1 second, man.
No, there we go. Am I good?
Yep, you're good.
I can share my screen. I can just hop in and kind of start sharing the screen.
Go right ahead.
Okay. So quickly, if I can kind of just take a step back real quick, Dave, I know we were kind of talking about who we are and what we do, and I can kind of quickly fast track to the training that we're going to be bringing. And I think for us, there are some really good trainers out there, and guys that can truly kind of, show you a little bit of a different angle in the business. That is their business, is kind of education and to teach you. When we do get into the educational piece here in a second, we're taking it from a different angle with respect to not only is it going to be free, but we want to teach you this education to support your business. Because for us, we want to remove any sort of risk with respect to lack of information. We want to give you that information. We want to typically tell you educational-wise things that we look for. Today, we're around a give or take an 8 to 10 person team, but we're taking down roughly 1,800 to 2,500 notes a year. So usually a staff size of that big usually needs to be more than triple that to actually handle that volume of incoming on a monthly basis, typically 200 to 300 units a month. So for us, we want to teach you how to remain small, remain nimble, be hub and spoke, utilize vendors that are nationally used throughout the country in all 50 states, especially if you're in New Jersey like you are today, and you want to start looking at loans in Illinois or Pennsylvania or New Hampshire or New York, and they're not in your backyard. These are the things from the educational perspective that we want to uncover for you, so that you're allowed to kind of do this business in a bit more of a remote fashion. So like we quickly talked about, just getting back into who we are, what we do, and what we're offering. I'm currently running the residential division of a parent company, and our parent company is Granite Investment Group. Granite Investment Group's been around little under 30 years. They do about $1.1 billion in revenue a year. Their core business is centered around senior housing, assisted living, and memory care. They're actually the largest owner and operator in the state of Texas. They're headquartered in Dallas. We're here in Irvine, California, right near Disneyland and right near Anaheim. So we started this residential division really kind of on the cusp of the crisis. So I'm sure most of us know or are familiar with the movie The Big Short that came out, that kind of helped crystallize more or less how this subprime debacle truly happened. But really, the way Obamacare got rolled out in 2010, it really began to change the way my parent company and facility providers accepted cash. They began to get certain tax and tariffs on their capital, which just more or less kind of pulled them back from acquiring more memory care facilities and kind of look a little bit more into this distressed arena. Our team that we always want to kind of make sure you guys lean on is we got a lot of folks here that have been around this distressed and mortgage industry for north of 15 to 20 years. Folks that were here well before the crisis, and folks that managed through the crisis and now are still managing things post-crisis. Believe it or not, we still have thousands and billions worth of loans still tied up in these banks where borrowers are 9 months, 12 months, or more delinquent. I don't think the mainstream media is ever going to let you know that. They're going to say unemployment rates are coming back, housing is beginning to correct itself and to begin to normalize and stabilize. For us, when we're seeing the back end of the product and actually how many loans are falling off the cliff, the data says so many things that are different than that. So I think that if the market truly understood that people out there are still not making their mortgage payments, you would have more folks that potentially are in this room that begin to strategically default on their mortgage, because there are folks that haven't made a mortgage payment in 2 years, but they're getting a modification given to them by Bank of America, right? So you're like, wow, so you haven't made your $2,000 or $3,000 mortgage payment in 2 years, yet the bank was willing to give you a modification, right? So this is actually what you're starting to kind of start to see come across the market. Dave, are you seeing like this big red? No, you're muted.
Yeah, I'm not sure what it was. You hit a button. There's a way to make an annotation like you can't see.
Wow, that's weird. Sorry about that.
Someone, there's a way to, it's on actual projection. The way you can change the setting on here. So much.
Oh, it's on your side?
It's on everyone's side right now.
Got it.
So someone one of the event people actually hit a button, I guess, and drew on it. I'm not sure who did it. Yes. Yeah, I've never done it before, so I'm not sure who had it clear. Yes.
Good?
We're good.
Great.
That's good. I apologize. And JP, I appreciate the comments in the thing. I appreciate it, man. High five.
So I think, kind of getting back into it, Dave, what we were mentioning, and just a heads up, you may want to mute your side, is that, for us, as many loans as we've actually acquired over the time, we've just figured out a way to best bring folks like you into the market. And the way to do that is to begin to make this market a little bit more normalized for you. So let me give you an example. So I asked Dave this the other day. I said, hey, Dave, if you had to explain the note business in a quick elevator, how would you do it? And before you knew it, Dave and I were 5 minutes later still talking about the note business. We're like, that's a pretty long elevator ride, right? So I think this is a quick way of explaining the distressed note business. So if you were to buy a property anywhere USA, Dallas, Florida, New Jersey, and the property is worth $500,000. And you go in there with your wife, your buddies, your friends over the weekend and see an open house, and you really like the property and you want to make a full price offer. So the real estate's worth $500,000. You're going to give the offer after escrow closes 30 to 60 days, potentially 90 if you're using a lending arm. Then you get the deed and the title into your name within that time frame, 60 to 90 days. So that's traditional brick and mortar real estate. The note business is the same situation as $500,000 house. But what if you made an offer for $350,000 for that same $500,000 house, but I wasn't able to give you the deed for 6 months? Would you rather buy it at $350,000, rather buy it at $500,000? So really the note business is a function of time. Can I understand foreclosure law? Can I understand bankruptcy law so I can figure out potential loopholes in the law that help me fast track foreclosure if that's my goal, if I want to get into the real estate and grow my capital and fix and flip and move on and do that and rinse and repeat? Or are there some of you folks in this room that are actually looking for yield? So you're looking for cash flow. So foreclosing and fixing and flipping and putting a realtor in the property is not your strategy. So we kind of have done a bifurcation of both, where we can show you both non-performing assets for everybody that looks to fix and flip, or we can show you cash flowing loans where the borrower now has stabilized, normalized, and is now beginning to make monthly payments on a more consistent basis, giving you a traditional cash on cash return in the 12 to 20+% range yearly. We supported roughly over 3,500 individual investors like yourself getting into the space. Believe it or not, Dave, that's sitting right here in front of you, is actually one of those guys 5 or 6 years ago when he and I were doing 1 loan and 2 loans, and he was able to toss me offers of 25 and 30 assets. He and I are working on a 6 loan trade as we speak, but this is kind of normally the progression of how the business begins to get going for everybody. Let me move this here. So like I mentioned, just to kind of crystallize, I think for us, and many of you, we may not have the exact sort of inventory in your backyard, because when we initially got into this distressed space, sorry about that. When we initially got into the distressed space of acquiring assets, we saw a humongous gap in the market. When you looked at property values 200,000 and north, you saw that every hedge fund, bank, money center bank, Goldman Sachs, BlackRock, everybody focused on that asset class, more or less because dollar for dollar, there's more margin to be had on a $250,000 house than a $25,000 house. So for us, we saw the misappropriation of pricing going on in the segment of 200,000 and below. And believe it or not, 8 years later, guys, still the banks, money center banks, servicers, investment banks, whoever they may be that actually participate in this space, are still not properly pricing loan values or fair market values of 200,000 and less. So for us, that was our opportunity to get into the market and be a market maker. So like we talked about, 7,000 loans purchased to date. We've purchased a little over 900 assets over the last 6+ months. I think our scalability between September and the rest of the year will more than double, just because in Q4 and Q3 of a typical fiscal year, the banks will sell more and more assets to clean off the balance sheet so they can go into the front part of the year with clean loans. Like we talked about earlier, additional of what we do is we're offering you guys all the due diligence valuation information that you guys are going to need to see actually in order to make a sound, educated decision, right? I think understanding the fair market values and the comps, et cetera, of a property, I think that's always our common denominator in the space. You guys need to agree on the values that we give you. Chances are, if Dave and I can't make a deal, it's because he's coming up with a different fair market value than I'm coming up with. And usually I've asked Dave multiple times, if you're seeing a value that is using better comps than our traditional valuations that we're supporting you, show them to me. Show me the comps that are better than what I had, because at the end of the day, as we all know, the market sets the pricing, right? So we'll be stuck with loans if we think a property is worth 180, but the comps are showing that property is truly worth 90, right? So if we stay in the pie in the sky, assets never get moved. So I think as a seller, you'll realize from us that we try and get on the grassroots with you. Where most sellers and banks, if we're not on the eye to eye with respect to value, just move on. I think for us, we're a little bit different in that with that retrospect.
I do want to jump in there. That's what people don't realize too often. BPOs are BPOs. We have a BPO actual person in the room right here, and they'll tell you quickly how it could be way off and why it could be off. We've seen about 30% of BPOs be wrong, and there's a lot of explanation for it, but understand that they are. With that said, if you're going to use BPO as your guiding point, make sure you're double checking it. But like Chaz says, just because he says an asset is worth 180 and you don't want it because the value's off, submit the bid anyway, explain yourself. I think you quickly understand what that means. And that's, again, he's giving you BPO's O&E title reports with the tape. There is no other seller out there that does that and give that information. Collateral information is usually done after a bid is accepted. You're seeing that before it actually happens. So they're upfront and honest. So just want to jump in and stress that point for those listening.
No, I'm glad you did. And we, as a seller, we run our own proprietary valuation models. So we're ordering our BPOs for you, right? We want you to at least have a starting point, pictures, comps, some sort of value on that house before you actually delve in, right? So if we didn't have that, it'd be hard for you guys to truly understand what the true value is outside of Zillow, outside of Realtor, outside of the normal websites most of us use. But I will say, when it comes to value, there's no better resource than picking up that phone and calling local realtors, local folks that are in the market that can truly tell you what a property valuation will be. Now, I'll tell you, in terms of starting your business, number one, realtors will do valuations for you guys for free. Yes, that wasn't a typo, for free. Why would they do them for free? Because they'll stay in the game with you, knowing that you may be buying that distressed mortgage from that borrower that's not performing. And Dave, there's that Chattanooga, Tennessee deal that you and I are working on. There's a foreclosure sale next month, October 6th, right? So that realtor will do that valuation for you guys for free, knowing that they could be the realtor once you get the deed in hand and come to them to list the property, right? So that's normally where your best resource is going to be, is going local and going to realtors that are selling properties and selling houses and listing houses weekly or daily or monthly. They're your best resource. So it's a little bit of a piece of advice, I guess, when it comes to valuation. Dave, would you agree on that part?
Yeah, absolutely. That's a huge, huge selling point. So, getting into deals, getting into your education, I think is going to be a huge point for us of what you're offering, why is it different. We're not knocking any education out there, but what makes you guys do 7,000 loans, and how can we get there?
So I think if you look on the screen, I think there's an ecosystem for a new coming investor that they have to establish. I think this list a little bit looks daunting, so don't let me scare you too much. But some of these companies out there and vendor management systems that you need out there, you need to have in place as your business begins to scale. So you need to understand BPO companies in the event you want to go outside of a realtor, right? There are asset management companies that will help you guys if most of you have 9-to-5 jobs, or you're a full-time mom or dad and don't have the 8-9 hours a day to build into this distressed note business. There are companies, etc., that will run this business for you Monday through Friday, and you more or less can be the portfolio manager or the supervisor that they're running up the updates to you on a weekly or monthly basis. So your business, you almost can be almost a passive investor. Not saying most of you want to be, but in the event you have other things that preoccupy your time, like Dave has a full-time job, but he has vendors out there that help him run his business. so that when he gets home from work, he can check all the reporting and see what's happened and the developments that happened, and his business is still moving in the right direction. So I think our different angle with respect to education is exactly what we're doing here. We have internal loss mitigating attorneys. We have asset managers on staff. Dave can attest to our gal Claudia, who runs my operation team, has been around for north of 20 years, doing all curative work for assignments and allonges, which, guys, that is everything that ties your ownership to a note, is to ensure you have the assignment and the allonge on the asset. So our team will help you, instruct you, teach you. There are current companies, Casey Wilson, Richmond Monroe, Pro Title, along with many other vendors that we'll give to you guys as a resource center that will help you guys ensure that your chain of assignments from Bank of America down to Granite, down to you, is clean, right? So especially as you guys get to the foreclosure steps, there are certain states in our country that if you don't have the proper documentation, they'll throw your file out. So you have to start all the way from the beginning. So these are sorts of companies that we'll put you guys in touch with. We'll give to you as a resource center. We'll give you the direct points of contact for who to call and who to work with and how to set up an account so that your guys' business can be a little bit more robust and scalable. As you guys can see, we have occupancy verification, curative services, training and mentoring, REO agent work, borrow skip training. And I think from kind of a high level, this is more or less kind of the curriculum and the run through that we want to help teach you guys. Introduction, obviously, to distress. We're kind of giving a high level view of it now. How to run loan analytics and due diligence and risk management, loan servicing and compliance. I think there's so many, at the end of the day, there at times can be so many daunting things that we want to help uncover and keep a little bit more simple for you. Because a lot of this, as you guys are getting new and you guys don't know who I am and you're getting to know me a little bit better, a lot of this stuff can be paralysis by analysis, right? You can learn so much information and you're like, oh my God, I don't know enough, right? And then keep you on the sidelines. So for us, we're just trying to kind of create an offering and a training system that's turnkey, that actually removes more of the minutia from the everyday business and allows your guys' company, or allow your knowledge base to say, look, this is brick and mortar. I need to ensure that I have X, Y, and Z. I need to have a process when I run my due diligence. I need to check X, Y, and Z. You guys can have checklists that you run. I know, Dave, we can talk about ROI calculators and Excel spreadsheets and things that can help your guys kind of keep your business sophisticated, making sure that you guys are catching everything from a loan level perspective. Borrower-centric workout programs. I believe at the end of the day, especially on this distressed note business, foreclosure is the worst case scenario. I would rather work something out with the borrower. I'd rather give them cash for keys, move them down the street, give them a moving truck, and avoid foreclosure altogether, and they sign over the deed to me. I'd much rather go that route than have to foreclose. So these are some tactics that we want to show you guys and teach you guys so that you guys can look at the business the way we look at the business. So that's how we envision the training, Dave, in terms of how we can help these folks scale.
I do definitely think it's a valuable information that some people are providing in their education, some people aren't. It sounds like a lot. You know, I'm trying to think from either an average investor or someone brand new in the space. It does seem like a lot. What would you advise someone that started getting into this business that maybe either understands rental properties or fix and flips? Taking this information is great. Do you advise them to do anything else to get started in this business?
I would definitely work with you. Because you've been cutting your teeth on this business for quite some time, I think that folks should work with a JV partner, especially with somebody who already has systems in place and that can help fast track that process. I mean, you've been at this for years, and it almost took you years to get to this position where you feel as sophisticated as you do on running deals, feeling confident on the pricing that you're giving. So I think the way we like to keep it as simple for newer guys is what we like to root into is your strategy. What is it that you're seeking to do? Are you guys looking for cash flow and you're looking for a passive income and a yield? Maybe you guys want to take some of your 401k or self-directed IRA capital and place it so you can now begin to get a yield on that. Well, we want to listen for that. Some of you may say, look, I've got a contracting background, or I know how to rehab, or I know how to property manage, or I know how to turn things into rentals, things of that nature. Well, we're going to listen for that as well. We're going to find loans and properties for you that we can help you strategize with. I think another odd and differentiator for us as a seller is we actually take the time to work with you pre-purchase, but most importantly for us, post-purchase. I always tell my guys half this job is getting somebody to do the deal, but the other half is to ensure that they're successful. If you don't make money, guarantee you're not going to come back to Granite. So for us, I think the way to get first started, Dave, especially for some of these folks that have not bought a deal before in the room, is I think they should be looking to work directly with you as they JV, because we're going to be giving you guys, like we spoke about, exclusivity with product that I think they can work with you on how to analyze, what to look for, what not to look for, things of that nature.
I hate to say I agree, but I do. I think that I wish I had somebody to lean on in the beginning when I did my first couple of notes. Stupid mistakes you didn't catch from a rental agreement that you inside where you have rent rider on there, you can start collecting rents, just unsure. When you're in the thick of things, it gets confusing. Having a partner next to you that can think things through and bounce ideas off of. Work with some form of JV partners, I think crucial, but I also think education that from a seller like you guys is awesome. I think it's one of the best things out there for them. And we have talked about the fact of making some assets that will complement your free training and the services that we can offer with joint venturing down the road of making exclusive offers for some of these new investors who want to take these courses, who want to get involved, and want to jump in very quickly. So that's something we want to work on, is getting people in the space quicker than sitting back and doing paralysis of analysis. Getting in, JVing, take education, and get rolling. Because the best way to learn this business is doing it.
Like, for example, Dave, I think, just for a newer incoming investor, I'll give you guys some just kind of a quick little educational part that will be a part of our series that we'll be working closely with Dave on. If you can see in the middle of the screen there, we have right under borrower-centric workout programs. We have something there called Hardest Hit Fund Program, as well as the government programs. So let me give you guys some quick math. So if you were able to come in and buy a non-performing mortgage for, let's call it 50 cents of the market value. So the house is worth 100,000. You buy that mortgage from us for 50,000. If you can call up that borrower and you have a borrower-centric workout program and your servicer gets a hold of the borrower and the borrower says, hey, look, I've been trying to get a hold of Bank of America for 2 years and they wouldn't modify my mortgage. It's because I fell behind, I either got a divorce, lost my job, had a health scare, something happened, right, that caused that hardship. So for us, because we've been in the space for quite a while, there's some programs out there that are backed by the government that are through the FHA, that one of the loan programs that they're releasing is called FHA 203B, FHA 203B. And if you buy a non-performing mortgage and you get that borrower to reperform and start making monthly payments, you can accept payments as little as 90 days worth of payments, and the FHA will come in and give you a 97.5% loan takeout on the new appraised value of 100,000. So can you imagine buying non-performing mortgages for 50,000, getting 3 months worth of payments, and then having the FHA take that loan off your balance sheet and give you a full payoff at $97,500 bucks? That's the type of programs, and these are the types of training little kind of nuances that we're going to be kind of rolling out to groups like yourself.
We had a quick question. What was the question? Okay, so Chaz, the question was, so in the room is, we offer free training to our vetted clientele. Can you explain what vetted means in your world, or our world?
Vetted for us means approved. We know you. You've signed our NDA. The information that we're given to you is proprietary. We want to make sure it's going to stay exclusive and not is marketed all throughout the internet. So vetted for us is more or less an approved buyer who's kind of come into our website and filled our information, so we at least know who you are. So we're not just kind of giving the information out to the world. So that's for us what vetted means.
And I do want to jump in also is, and I'm sure you've seen as much as I have, brokers out there. You know, you guys own these assets, are selling them yourself. You have collateral. You're not a seller's agent. You're not a buyer's agent. You guys actually own the collateral. There's tapes throughout the world, like you said before, passed around. You guys are strictly principal seller of everything you own and can trade immediately.
It's a great question, Joe. Sorry, Joe. Dave, email came through. Dave, I think that, as you know, a lot of these groups out there are presenting themselves as principal owners, and they own the tape, which is why they're trying to show you the tapes, that you can bid the tape at their pricing, that they could potentially make a spread between what you're willing to offer and what they'll give the actual real seller. So for us, we can show you assignments, allonges, proof of ownership from bank into Granite's name. The question that you must ask is, when people are trying to show you product, can they prove that ownership level? Can they show you actual documentation that has their name on the actual documentation of the product they're trying to sell? So every asset that we market out, every loan, REO, property that we show you is owned and managed by Granite. And we don't broker as many opportunities. Folks have brought us to put out their product to our database, because we have thousands of investors that are spread throughout the country. We do not broker any loans that we also show out to the market. So everything that we market and sell, we own the mortgage on.
So, Chaz, we have a few questions in the chat window. If you can look over at it. If you're unable to see it, I'll give you a spit out. Tim asked a question. Also, does he need to have LLC set up to be vetted?
Let me get to that chat window. I'm not sure where I put that, Dave.
You should be a chat in the bottom of your screen on your Zoom window.
Yeah.
So the question was.
Yep. Yeah, no worries. So to answer that question, to get back to the slide here, sorry about that. To answer the question, no, you can sign up as a self. There are particular states, though, that you are going to want to be kind of set up through an LLC or an S corp, just to kind of have a little bit of a protection against yourself as an individual, especially if a borrower wants to contest and wants to say, no, look, this is my house, and wants to come after you as the lender. You may want to always protect yourself via being in an LLC or an S corp or some structure that you best talk with your CPA about. But in regards to kind of coming in and get signed up and starting to see some of our stuff, you can sign up as a self or an individual.
Question here, if you're able to see it, from Doug. What pricing expectations for one note versus a small pool on percentage of basis of BPO? I do want to jump in there and answer that question to a point. A lot of people in the space are selling that you buy based on BPO, buy UPB. I strongly encourage people, don't bid based on a certain percentage of BPO. You really should run some kind of calculator to find out. I've bid on things with Chaz at 70% of value. I've bid at 40% of value. Sticking it at 55% of value may work for Chaz, but may not work for you. So, Chaz, would you offer that when you're buying multiple assets in one shot? If someone comes out to you and wants to buy 5, 6, 3, 4 versus just one.
I thought I had that slide here, Dave, but to answer that question is, let me use this example. I would say, and who was that question from, Dave? That from Tim? Sorry about that. So no, yes, the pricing varies between if you purchase a one-off or you purchase a bulk level amount of assets. So our pricing ranges from wholesale more or less to retail. So kind of using a kind of a simplistic example, it's almost like Costco, right? So it's almost as if you go to Costco, you're going to get a much better deal for buying bulk than if you went to Safeway, right? So absolutely, I think for us, what you'll really come to enjoy, especially as you look at our pricing, is we understand that we're leaving meat on the bone for you. We're knowing that we're at times selling loans for too cheap. Because guys, we're in this game to hit singles and doubles, where other sellers absolutely are in this game for home runs. Sure, we want to make money, and home runs happen when loans get paid off or borrowers want to walk away and sign the house over to us. Those are home runs. But usually when we sell deals to you, especially on a one-off level, even if you buy one, there's meat on the bone. I mean, there's deals that we're pricing out for Dave right now for, some of them are in the high 40s, some are in the low 50s of today's market value. So for us, we still know that there's room in there for foreclosure costs, for servicing costs, for potential cash for keys, for realtor commissions, title and escrow, things of that nature, and you're still going to make a north of a 20% return. So we know that we're leaving good meat on there for you guys. But yes, to answer the questions directly, their pricing does range between one-off level and bulk level. So if you buy one loan, the pricing will be different if you buy 5 or 10 or more.
The next question we got here is, if you're able to see, is what happens to us as an investor if we own a first position note and the home gets destroyed by a natural disaster or a fire? How does that affect the value of the note?
Dave, are you keeping all the forced place insurance that we have on our assets once we sell it to you? Ooh, I stumped you. You may still be on mute, my friend. So yes, most every asset that we own and sell, we have a forced place insurance, which protects against Hurricane Irma, Hurricane Harvey, things of that nature. As you guys can see, what's happening up in Washington and Oregon, where half that state is under siege with respect to fire. So every asset that we purchase directly from the bank, we actually expense forced place insurance on our assets that cover against those sort of natural disasters. And the forced place insurance policy remains in place, I believe, for 60 days post-close that we sell the asset to you. So what you would want to do within 60 days of ownership, so that if something were to happen between the transfer handoff between us and you, is you'll want to make sure you still call that same forced place insurance vendor and just get the policy extended, or you can convert it over to whatever you choose. But usually, if the event of a natural disaster happens, the insurance will cover to you, and usually you'll get a full payoff on that note. We've had a loan years ago where the gal walked away from the house. She left she left something on in the property, and the property burned down. But our forced place insurance covered it, and we actually got a full payoff on the mortgage. So usually that's typically what happens. So it most likely should not devalue that note.
Awesome. I want to get into talking about, we have all this education, all this information coming out. What's the next year look for you guys? How many assets are you looking to sell? How often will you see new assets? What can we expect from you guys in the next 12 months?
That's a great question, Dave. I think for us, especially for everyone that's in this room today, I think when you look at our size and when we're going directly to banks and we're always raising capital, it's easier for us to raise capital when the investors can see a consistent supply of properties consistently coming down the pipe, right? So for us, we understand it's hard for you guys to raise capital when the product that's coming to you is inconsistent. Comes to you 1 month, doesn't come to you for another 4 months, and you see a lot of inventory and then it goes away. So I would say for the next 12 months on a conservative basis, I would say you would see, give or take, 80 to 120 brand new loans a month for the next 12 months. And I would say that's a conservative volume amount, Dave. So I would say between the next 12 months, I think we'll put out north of 80 million to 100 million worth of equity and capital, which should normally bring us about 2,800 to 3,500 assets. So give or take 200 to 300 units a month is what we're forecasting in 2018 to be able to put out.
I want to specify too for so many people in the room. You guys sell first position only at this time, correct?
Correct. There's times, look, we understand seconds. There's a lot of different exits and good margins and good ROIs in seconds. I've been in the first lien game for 11 years now. I want to be in senior position when I buy a mortgage, not knocking any junior lien position buyers. But if I ever go to a bank and the bank happens to own the first mortgage and the second mortgage, and we can do a combined sell, I'll absolutely take that deal all day. I have a lot more bargaining and leverage with the borrower when I do that. So today, first lien only. Stay tuned for the future for potential seconds.
All right. So we did talk earlier that in the coming future, what we're looking to do is get more people onto your education program, get more people buying. By people buying your assets, you guys can buy more. We're going to be doing we're going to be having more conversations about getting people to buy your inventory directly, and by using me as a way to get exclusive offers. We're going to get more into that as we come along, But I think what people need to know is that we want to get you buying. Whatever that means, however that means, let's get you guys buying. I think that you guys got going on too, and I'm going to bring it back to you. Do you guys have anything else that's coming out anytime soon that you guys can offer to some of the new investors besides some exclusive offers that you're going to probably look to give to me to work with new investors along with your training program to help out? Is there anything else that you guys have coming out that you guys want to, or places you're going to be so people can meet you guys as well?
Yes. So a lot of different things. So for many of you, Dave, if what you guys can do is if you do want to get signed up and start to see our inventory, we do want you guys to go through Dave initially to kind of start seeing most of our products. You can visit our website at granitestrategic.com. We do have a get started button. We have an NDA and a vetting package that we would like you to fill out that's electronic. We would definitely ask you, there's a referral by source there. And we want to make sure that we understand where you guys are coming from. So if you guys wouldn't mind putting Dave Putz down as your referral source. And then Dave, as we kind of get some of these vetting packages in, then we've already kind of segmented a portfolio that we want to kind of show you guys and see if this fits the criteria. Maybe after I hop off, you can kind of get a better sense of what people are looking for, what assets they potentially are looking to seek and locations, etc., to ensure that the portfolio that we kind of dug up for you fits the criteria. But I would say that within the next 2 to 3 weeks, it kind of depends on your timing. So you and I can strategize. But we've got assets. We got a portfolio available now for you.
Awesome. So I do want to get an idea where people are at with their investment opportunities and where they're at. So I'm going to pause that before we get into the next topic and close up for questions. I'm going to throw up a poll just for people, just quickly indicating where they're at with their investment world, just by clicking, letting us know. This is completely anonymous. Your information will not be shared with the group. I will see it, but that's it. Just to have a sense where you're at. So if you just click on the radio buttons indicating your answers, where they're at. We'll just give you a 2-minute grace to look at it. Chaz, make sure you put that you bought one loan in your life. And while they're doing that, I want to stress that getting in this business can be complicated, but also you have a lot of tools around you. This space is extremely small. A lot of friends, a lot of people would support you. A lot of people have answers for you. It's a nationwide group, but we have, as I shared before, a great Facebook community. We can share ideas, questions, information. And you can feel free to email me, Chaz, any questions you have. In the upcoming months, we want to stress getting you involved. Whatever that means, however we can solve that are questions. So, Chaz, well, we just finished up these poll questions. Is there any kind of time frame when your education courses will become available?
So yes, I would say we're kind of on track at this moment for the middle of next month to kind of put our first curriculum and our first information out there. Chances are we can kind of release that a little bit early for you and most of the group that's on this webinar, so that we can kind of give a sneak peek a little bit to majority of that product. So I would say give or take a month, Dave, and we should be ready to rock.
Wonderful. We're looking forward to it. I'm going to open it for questions in the last 10 minutes or so. Chaz, anything else you want to touch on before we go right to questions? I'm going to end the poll so we can everyone can see our pretty faces again. Just a quick idea so everyone can see kind of what the poll is on the people here. It will not indicate your name, but you can quickly see where everyone's at on their numbers. Currently, we have it looks like 23 people on the call, either phone calls or whatnot. But here's some ideas. We have a lot of great beginners who want to dive in. This is awesome. And a couple people have done the bigger numbers. And it looks like we have 7 ready to go. That's exciting. And those who voted no, let us know why. Is it something they're holding you back? Or what is it? If it's capital, please don't be concerned with capital. There's IRA money. There's retirement money we can work on. all kinds of stuff. So, Chaz, any kind of last comments, questions, things you want to bring up to the audience as we're still recording this and we'll be posting this on the YouTube page?
I think that for many of you, that if you can utilize a proper resource and you can ensure that you can get the right questions that you may have answered, and you can kind of keep your strategy small at first, and then as you get more comfortable, begin to expand that box. I think that will be the quicker move for most of you to be able to get onto the playing field who have yet to purchase their first mortgage or their first note, especially if you're looking to potentially start small. I think if you keep your strategy pretty simple at first and then expand a strategy as you grow further, will be the best angle and the best opportunity for you guys to actually join us and get onto the playing field. I'll leave you with that, Dave.
I appreciate you being involved, being here, and joining me and sharing with everyone everything you got going on. I think it's amazing. You guys have been around forever, since I began. The fact you guys have done what you've done for so long and never one bad thing is said about you guys. Every tape has always had all collateral. I don't believe we have any questions in my audience for you. But Chaz, we definitely want to make sure we have your information. Do you have a quick view of share your screen to show your email address, or put your email address in the chat box, whatever works for you. So everyone can write it down. I'll also throw it in the chat window for those people for later. There you go. There's so I'm also going to put this email address in the actual the website. You can use the website for them. And for those who need it, I'll also put the email address in it. There you go. Once again, thank you very much, Chaz. I appreciate it. Are you going to be joining any kind of conferences coming up in the next couple months? Unmute yourself real quick.
We're going to be here locally in Orange, California for the Distressed Mortgage and Private Lending Expo. In the month of October, we're going to be visiting, hopefully if Hurricane Irma did not completely wipe out the Fort Lauderdale and Miami area, we're going to be in Fort Lauderdale and Miami in October for the Pitbull Conference. And then we also will be one of the main sponsors in early November for the Note Expo that's being put on by Colonial Funding, Eddie Speed, Bob Repass. So if there's a chance for us to get out to meet you guys, that'll be in Dallas, Texas in the month of November, Fort Lauderdale in the month of October, and here in Orange, California here this weekend.
Wonderful. Well, again, thank you very much. I appreciate your time.
Thanks for having me on, Dave.
All else, thank you again for joining us, and we will see you again soon.
Thank you.
Bye-bye.
Because I think with the service of notes and we were just looking at that from them.